Market outlook. Calendar week 10-week-09 of 2026 was shaped by a geopolitical event that extended far beyond regional tensions and had implications for global financial and risk assets. In the early hours of Saturday, February 28, 2026, the Israeli armed forces, in coordinated action with the United States, launched a military offensive against Iran. The operation, reported by multiple international media outlets as a large-scale air and missile strike, targeted strategic military facilities, command structures, and defense infrastructure within Iran, as well as high-ranking members of the Iranian leadership. According to several sources, key targets in Tehran and other cities were hit. In the aftermath, the situation escalated rapidly. Iran responded with missile and drone attacks against Israeli cities, including reported strikes near civilian areas, and launched missiles targeting U.S. military base positions across the Middle East region, including locations in Bahrain, Kuwait, and the United Arab Emirates. Explosions and air raid sirens over Tel Aviv and other urban centers were widely reported. Market reactions during week 09 were immediate, yet structurally different from what might be expected under classical risk-off frameworks. The broader digital asset market did not experience panic-driven sell-offs comparable to traditional markets such as energy or sovereign bonds. Instead, Bitcoin dominance increased to 57.84% from 56.37% the week prior. This development signals a relative capital concentration within segments of the crypto market perceived as comparatively more resilient, particularly at the expense of higher beta altcoins. The Fear and Greed Index remained in the extreme fear zone, with a current reading of 11 after 9 the previous week. The combination of rising dominance and persistently risk-averse sentiment reflects a defensive market structure within the context of geopolitical shocks. Within this environment, quantum data analytics did not issue new research signals during week 09. This does not indicate a lack of market activity, but rather the result of systematic signal validation. Periods in which external geopolitics dominate the price discovery process tend to produce elevated levels of noise relative to usable trend or pattern formations. Models based on historical pattern recognition and statistical indicators frequently generate unreliable outputs under such conditions. The platform's analytical framework therefore classified the prevailing environment as non-signal conducive until clearer internal market structure re-emerges. Looking ahead to calendar week 10, the focus shifts back to structured macroeconomic data releases that may reintroduce more stable risk preference and liquidity dynamics. Key publications include the ISM Manufacturing and Services PMI, the ADP Employment Report, and on Friday the US non-farm payrolls, unemployment rate, and average hourly earnings. These data points operate through multiple transmission mechanisms. Labor market indicators shape expectations regarding the Federal Reserve's monetary policy path, influence real yields, and impact the US dollar, which in turn functions as a valuation anchor for global risk assets. For digital assets, this implies that the risk and expectation profile may transition from a geopolitically dominated reaction phase toward fundamentally driven macro-induced movements. Rising real yields within the US rate complex increase the opportunity cost of non-yielding assets, which, combined with already defensive sentiment, has contributed to the relative underweighting of altcoins. Bitcoin dominance, as a structural indicator, may continue to concentrate stability-oriented capital, while more volatile altcoin segments remain sensitive to macro-driven volatility expansions. The current escalation suggests a market regime still heavily influenced by external event risk. The combination of geopolitical uncertainty, sustained extreme fear sentiment, and an upcoming macroeconomic calendar requires elevated signal filtering and tolerance thresholds. A return to more trend-driven research signals typically depends on the re-establishment of consistent macroeconomic risk preferences and a reduction in the dominance of geopolitical shock factors in price formation. Disclaimer: this report is intended solely for informational and research purposes. It does not constitute investment advice, nor does it represent a recommendation to buy or sell any financial instrument. Quantum data analytics. Analytical, strategic, innovative.